Well, Leif, thank you for joining us today. Would you mind introducing yourself?
Yeah, so I'm Leif, co-founder of Public. Public is an investing app, and essentially how you can think about us is that we're kind of focused on people who are a little bit more serious about their investing. Mm-hmm. And so people build proper portfolios for the long term that have, kind of truly like their life savings in there, and so on. And we try to help them do that by giving them as many opportunities as possible to kind of grow their wealth.
That's great. And I know you. I actually really enjoyed reading a little bit about your background. Like you've done a lot of different types of things. Would you mind talking a little bit about your background?
Yeah, German originally.
Yeah.
So the beautiful accent comes from. I always give the disclaimer beforehand. So like if, something comes out weird, it's just a German accent. But yeah, I moved here in 2008, and started a few companies that I mostly sold. Last company before Public was like a freelancing software, I called it. It was like, payments and invoicing and stuff for freelancers. Sold that to Fiverr, that freelance marketplace, and a bunch of other stuff. Yeah. But like background, I would say, mostly like startup growth, I would call it.
Okay, and I'd like from a startup perspective, I often think like you're either like a product person or a salesperson. Huh. Like, how would you categorize yourself?
I don't know if I would categorize it in those two, to be honest. I would consider myself, my DNA, I would say, is mostly growth.
Growth, okay.
But growth from a marketing brand perspective, as well as growth just from a perspective of, things you need to do in product or business in order to just, grow a company, so to say. I would put my, kind of DNA there. But like I studied design. Yeah. So like, I'm happy to nerd about design and, be deep in Figma files as well or whatever, I love to like nerd all about some copywriting here and there. Yeah. Like whenever the creative team suddenly has to like write some, TV spots or something, I'm like really deep in that just because it's really fun. Yeah. And so on. But it's, it's kind of all over the place. So the growth, I would say, is like that common denominator.
That's very cool.
Yeah.
And so how did you choose the name Public? How did that come about?
First, we were just looking generally at names that make sense for our business. And then the second thing, to be super honest, we were looking at like where is the ability to also have a name that could fit with a good domain.
Okay.
And we saw that public.com was generally available, owned by like typical domain sharks, I would call them, like people that buy and sell domains. Yeah. And I think we first bought like hellopublic.com also. Yeah. And then we were like pulling on the thread of buying the actual public.com domain name. Yeah. And I think we acquired it 2 days before launch or so. And then, obviously did the big, quick DNA switch, DNS switch up and whatnot. And then, literally right by launch, we were able to launch with the public.com domain name.
That's great timing.
But like the general notion obviously is like, there's an aspect of, it's on us to define what public markets are and what people have access to. Yes. And then there's just the aspect of, how available it is to people.
And so when you launched Public, like were there like one or two problems for your customers that you were trying to solve, or what the pain points that you're really focused on?
Yeah, I would say what we saw is that in our generation of investing products, most of the products that were out there were really a little bit focused on speculation. Okay. Options trading, CFD trading in Europe, really different crypto maybe, and so on. Yeah. And when you look at different generations, you kind of see always how each generation kind of has their platforms. Yeah. And, the generation before us maybe had, their Schwab or their E-Trade, if you were, maybe a few years later, more in the 90s, E-Trade again, a little more active trader in the regard. But like every generation kind of had their platform. Yeah. And when we looked at what was out there, it became pretty clear that because everyone was so focused on speculation, that the platform that could truly be the defining platform for that generation didn't truly really exist yet. Yes. And a big part of that is that if you just gamble in the markets, and that is also just what becomes your brand as a platform, that you're the casual trading app and so on, you're gonna have a really hard time acquiring, the assets that will come from the great wealth transfer. You will have a hard time to acquire the assets that come, from people's real life savings, and so on. And I think that association of what the product is truly for, which comes from what you offer, how you brand yourself, the first users you acquire, I think is really important. And so I think it's also why in the early days of a company, I think it's super important to be mindful, not just about acquiring as many people as possible, but acquiring the right customers that you're trying to build a company for. Even if you don't perfectly have the product yet, potentially, but to be a little bit mindful of, because people will come in, they will be the ones who give you product feedback, they will generate the data that you will make decisions on, and so on. And so it's very easy to kind of, fall off track if you're acquiring the wrong users early on. And I think that happened to a lot of these, platforms that came before us, in that kind of new age, new broker world. Because then people would just, you might have acquired people who were more active trader. They will ask for margin, they will ask for options, they will ask for futures, all that stuff. And then when you build those things, and that's fine and good, and you can build a good business there, but you will also build something that is more of that niche active trader product that might have a harder time being taken serious by someone who's not, trying to predominantly do options trading. And so we really look at the sense of like, hey, let's try to more become the next generation Schwab. To build something that truly has a chance to acquire the assets that will come from that great wealth transfer.
Oh, that's great. Well, I did interview Charles Schwab on a video about 5 years ago, and I asked him a little bit about like how he was building it in the early days as well. And obviously, 20, quite a few years ago, right? But it was like at that time, trading was very much like the domain of like, you got to be elite, right? And to make it more accessible for, back then for that generation, now you're building it for this generation. How much, were there any behaviors or attitudes of this generation that you're building for that are like markedly different from, say, prior generations?
This generation is very heavy self-directed first. Meaning, I think it's because number one, they were like just acquiring financial literacy way earlier in their lives, just through social media, because they have access to tools earlier, like brokerage accounts, like crypto accounts. I truly believe that crypto has been actually a big driver in driving financial literacy as well, because people make experiences trading assets sooner in their lives and so on. And so usually I think people were starting to invest at like a life event of, you're being married and you get some money for that, or you had your first child or something. And those were like the moments where people start to invest, which is mostly in like their, mid-30s maybe and stuff, maybe early 30s a few years ago. But like, and now you're seeing people go into the markets literally in their early 20s and such. And I think that has created this generation that is more self-directed first. It has more confidence in, their own skills, and, that investing is not rocket science, it's just investing. And you see that in people's behavior. And so I think therefore also there was this nice New York Times headline, essentially saying of like, thank you for the golf invite, but you're not going to manage my money. Which basically talked about like, more wealthier millennials who don't really want financial advisors anymore. And we see that entirely. Like we see how people are just way more confident in their abilities. They don't necessarily, believe in the advice that an financial advisor is giving them, and so on. That doesn't mean that their entire portfolio is completely, fully self-directed. We always look at it as more of like a spectrum of like someone fully managing this for you and you doing everything yourself. It's like the sides of the spectrum. But there's a lot in the middle of that. And like there's this concept we call guided investing, which more sits in the middle of it, where it's like you might have an initiating idea, but then the system or the AI also can give you, more information and context or, suggestions that you then act upon with your own decisions and things like that. So the spectrum was much wider, I think, nowadays. And we're trying to really build a technology throughout that spectrum. And so maybe part of your portfolio ends up being managed because, you're investing into this like more managed fund. But maybe the initiation to investing into that was more of your own will and your own experience and such like that. So I think it's more nuanced than just the old world of either you do it yourself or you have a financial advisor. And there's a lot that technology can do to kind of fill that spectrum.
And that seems very like a very difficult problem, or like that, because there's quite a broad range there. That spectrum is wide, and because each of these decisions is so important, there's a lot. There might be a lot of agita in terms of on the part of the customer. Like, how do you, how you built a platform that like your customers trust to be part, regardless of where they are on the spectrum?
I mean, trust is like, I would always say like trust is built over time, and it's built through a consistency of actions over time.
Yeah.
And so, if you consistently screw something up, I can trust that you will screw something up in the future. If you consistently, do something great, I will trust that you consistently will do something great in the future, right? So it is built over time through your actions.
Yeah.
And I think it's the same for brand in general, right? Like your brand is built by everything you do.
Yeah.
And that touches your customer service, your product, and so on. And so therefore, it is just something that is driven by literally everything you do. And that falls, one sector, for example, we're kind of proud of is just our uptime, right? And just like how, a lot of the incumbent brokers nowadays have a lot of tech issues because they're, having this like old stack potentially where different things are built on different, old stacks throughout the years. And it's kind of held together somehow, but it's easier to suddenly have a bunch of downtimes obviously if the technology is older.
Yeah.
And versus everything is built fairly recently and like from the same kind of engineers and such. And so we're kind of proud of like, for example, things like our uptime. Uptime is then one of the ingredients that will build trust over time.
Yeah.
Because you have less issues as you use the app.
Yeah.
On the other hand, obviously, is also just like in your actions. And I think we always talk about the sense of value alignment between your company and customers. And that value alignment, creates this like emotional bond. And that I think is another aspect that builds trust.
Yeah.
And so we've always done a lot of work to be very transparent of how we do business, how we make money, how the market structures work, try to educate people around that, things like payment for order flow, which we don't do in equities trades and things like that, to kind of create more trust there as well.
Yeah.
And I believe very heavily into this concept, which I call emotional retention, where as a company, on one end, you have retention, so people sticking with you as a company or as a product, just because of the utility it provides.
Yeah.
Sure, and that can be pricing, that can be the things you offer, and so on, the great features you have. But those things are easier to compete with.
Yeah.
There will always be another company that can build those features too.
Yeah.
There's always like another cool startup that can do it, that maybe makes it cheaper than free or whatever,
Yeah.
and so on. So those things you're like kind of always kind of sprinting behind. You're like always, trying to make sure people are not catching up quick enough.
Yeah.
Versus with emotional retention, versus utilitarian retention. Emotional retention is that bond that happens between the customer and the company, and that is very heavily driven by these values, right? And it's like, hey, I believe in the way you do business.
Yeah.
I believe in the transparency that you're having. And, because we're kind of aligned on a value basis, like on a values basis, I kind of, kind of stick with you as a company and, and so on. There's this little like anecdote I always use of that, in a perfect world, you want to have the scenario where if, you pull out the competitor app now and we sit together in a bar, like my reaction shouldn't be like, oh, I use public, it's nicer, the UI is nice. I like this little asset class they have, something. But my reaction should be like, whoa, what the fuck? Like, what are you using there? No. You should use public. Here's why. Doom, 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 doom. And those bullet points, like, I think are these value-driven arguments that you arm your customers with to then rally on your behalf.
Yeah.
And that's what I think, and that comes through actions over time. But it's another aspect of trust, right?
Yes.
So to say. But
yeah. You're like, if you talk to any VC right now, they're going to talk about like how one of the hottest sectors is actually the sector that you're in terms of wealth management, investing, and how are you viewing that, and like in terms of like where you want to take the platform at? How do you continue to have these customers be proponents in maybe it's getting as there's more focus on the sector?
Yeah, I mean, the sector, so to say, is becoming hotter again. So to say. I feel like it was like a cycle of there was the first generation, and then maybe 2022 it got a little cold, and now it's heating up again. And obviously, a big aspect there is because the great wealth transfer is becoming real. and you are, the old numbers were 70 trillion. I think the last number came out was like 90 trillion or something of assets that are being passed from one generation to the next. Obviously, those assets are growing because they're investable, because they're invested, for example, and so on. Of the 70 number, about 28 trillion was investable assets, stocks, bonds, etc., which is like basically assets that platforms like us like service, like today, not private businesses, not real estate that people own, literally just stocks and bonds and so on. And as that passes down, there's going to be huge opportunity, right? And especially because of what I said earlier, of that this generation is more self-directed first. So if you think of, someone who is inheriting, a lot of money from the parents, now it's like, Charles, the financial advisor, calls them up and is like, hey, you might remember me, was when you were a child, I was sitting with you, once a quarter at the dinner table, if you remember that, and so on. And they will be like, Charles, I like you, all good, great what you've done for for my parents, but what are your thoughts on GLP-1 drugs? And he's going to be like, I don't know, or what's your crypto take? And I think because they're so much more educated about what they know and how investing works and so on, I think they will be more critical. And the other thing is they will want to have some more control over those. I'm not saying that they might move the entire inheritance immediately into a public account or something, but they might take 10, 20, 30, 40% of that and be like, you know what, Charles, very nice. These strategies, like, fine, leave it sitting for now, but I'll take some of this money and I will do this and this and this myself. Because I'm not trust you into your opinion on GLP-1 drug strategies or something, for example. And I think there's going to be a lot of that happening. And so there's going to be a big opportunity for that. And that's also why, again, we're kind of focused on building something that's a little bit more a serious investing platform, not just a casual trading app, so that when those times come for people, that we are that place that people can take serious as a place where you can put your life savings, not just, buy your Shiba Inu coin or, your meme stock or your, zero-day options trade or something like that.
So that's fascinating, because it also makes me think of, like, if I'm a more self-directed investor, there could be something where the value proposition is more, let's say, data about GLP-1 drugs. There could be maybe a more community, like what are your peers doing with GLP drug type of investments, versus like an AI or analytic solution that helps you think of, like, okay, you can manage your beta or alpha, whatever, if you do, like how are you thinking, or how should, what is your platform thinking about it?
But that's exactly it. And like the way we look at our platform is seriously like there is assets and there's insights. And assets, very straightforward, give people as many opportunities as possible to grow their wealth, right? Many asset classes as possible, instruments, different ways of how you can, like, create certain assets and so on. But the other side is insights. And insights is really the data around the markets, the data around all the companies. There's also data around crypto even, then there's social sentiment, analyst information, et cetera, et cetera, et cetera. And then what are all the different ways to make this as useful as possible for someone to, either drive actions of it, to get educated, to build your own strategies, and so on. And we really look at that as a little bit like a push and pull. So there's moments where we have an AI agent in the app that's called Alpha. And so literally on every stock, you can just swipe down, ask any question about the stock. And that model is fed with all the financial information, with custom company KPIs, analyst reports, all that kind of stuff. And so you can just ask any question about those stocks to kind of inform yourself. But that's like the pull, right? That's like the ChatGPT type of use case that you would argue. Now, what we find even more interesting is the push. And the push is that where the AI or the system itself, partially AI potentially, but is giving you this context and this insight as you go along throughout your day. And that we see is like there's a lot of powerful things that can happen in that. And so one feature, for example, that we have called Why Is It Moving, where it's essentially we look, basically we kind of scan all stocks throughout the day. And then if a stock is moving, like crazy, for example, and there's information on the internet of like why that might be the case, we actually summarize it, we put it on the stock page, if you own the stock or watch it, we actually push you an alert into your inbox in the app, and we'll tell you of like, hey, this is likely why the stock is moving. Yeah. And you can tap on that and actually dig in deeper, with that real-time information of like what's actually going on. Yeah. And even by just getting this information through your day all the time, like you learn a little bit, you learn how the markets move, you get a better feeling for it and so on. It makes you more confident over time, and such. And those are the types of use cases we find super, super powerful. And then the next stage of that is where those insights are not just being used as pure, like, call it like content information, but where those insights are also being used actively for you to build your portfolio, right? And that goes into this like guided investing kind of, framework that we talked about earlier.
Fascinating. And I actually, obviously, like we're looking forward to having you as a keynote speaker at FinTech Meetup. Like, what are your, what are you looking forward to about the event?
First, whenever I go to these things, I obviously leave with a lot of great insights. Because like these events are always great because, especially like things between founders and stuff like that, right? Like you need these in-person moments to like really, have some truthful exchanges. Right? Those things don't happen on Zoom calls and whatnot. They don't, right? They don't. And so on. And so like these moments where you can come together and kind of like, really get some like truthful insights, I think happens in those like literally like, at those conferences like FinTech Meetup and so on. And the other side is obviously like, also for business development, it's great. One of the main ways of how we actually grow is partnerships, for example. Like most of our paid marketing dollars, they actually go into partnerships, for example. And, so even just for the team, these events are super important because like, the amount of partners we've gotten, from actually, engaging, elements of FinTech Meetup and stuff has been great.
What type of partnerships have worked for you guys?
There's different things. So one example we always bring up right now because it's a little bit more unique is Clear. Okay. And so Clear the thing for the airports, right? And so you can actually use Clear now to also sign up for public. And you kind of skip a bunch of steps in KYC. So it's actually an easier way to sign up for public if you use a Clear account. But then also we have a partnership on the other end where, we get exposure to their audience as well, by being a Clear partner. And so like that's, I think, a very good, example of like a more proper integration that can drive growth for us. Also drives growth for Clear. It's very, very clear win-win. No pun intended. Very no pun intended.
I'd also imagine that as someone with a design academic background, like you can appreciate like the user experience being simplified by something like that.
Yeah, 100%. Yeah, 100%.
Actually, that's another, like from a partnership perspective, like for example, Clear is both a user experience as well as a customer reach type of view. Like I imagine you're probably looking for both types of partnerships, or is one more?
Yeah, always. Obviously, growth is always the number one topic, right? No question. But that is also done many different ways, right? Like we've done a lot in terms of building out our API, for example, and so like using the API, like our API now, we're doing a bunch of partnerships and like integrating into, Copilot and ROI and like all these kind of, apps that want to potentially connect to your public account. Like those things are also great because it also just like, it expands our ecosystem. It's a great value to the user, and it might also drive some growth, but I think those things are always great because it also creates retention for us, and so on.
I love the fact that you talk about public as an ecosystem because I think, obviously like when you're in the early days, it's just like, you're building a product and then you're building a company and then you're building like it sort of keeps on going. And like from a design perspective, like what does that word ecosystem put any more responsibility upon you to develop that or to design an ecosystem?
Yeah, I would say like, I mean, it's a broad word, right? Many people can interpret their own stuff into it and so on. I would argue it's a sense of that making sure that most things you build and add to your product add value to the rest. So that you're not just building something in silo and it's like, I now edit this one feature, for example, and that feature is a great feature on its own, doesn't add any value to any of the other features, but it's a great feature, you know, like it can be fine, you can do that. But I think the best ways to grow the offering of your product is to make sure that the things you add grow value with everything else you've already built in the past as well, right? And therefore, you know, one thing we always talk about when it comes to like these money super apps, right? Is that like for many of these money super apps, the only thing that really connects the different tabs is that they're all loosely related to money. But like your student loan does not connect to your brokerage account, does not connect to your mortgage, does not connect to your whatever, credit card, you know, whatever. And it's just like, oh, with a money super app, just like everything's something to do with money, and you can move money around between the things, and that's why it's great. And we always more talking about the sense of that we want to make sure that that everything we add talks to each other and adds value to each other. And so, you know, obviously Alpha is a good example of Alpha adds value to the entire platform, right? It doesn't add value just to one tab or something. It's not like the Alpha tab, right? But Alpha is weaved into everything that's in the app. You know, and I think that's maybe a good example. You know, but also just like, you know, when we add a new asset class, we don't just see deposits in that asset class to be like the additional flows. We see deposits in all asset classes go up. And so by adding another asset class, we're adding more value to all other asset classes, so to say, because now someone can view that, because now someone can consolidate their account maybe a little bit more. They see us as more of a place that can be their primary investing account. And so suddenly deposits go up everywhere, right? So by adding another asset class, we added value to everything else of the app and stuff. And so that's how I would think of ecosystem, right? Ecosystem should be something where what you add to your product adds value to everything else you've already created in the past.
That's just a very smart way of thinking about it. Also, I love the fact that just because you can do something doesn't mean that you should do something.
100%. And you should kill features too.
Yes.
Right. So like that's like it's interesting because we've killed stuff in the past, right? Like we expanded to the UK for a few months and we killed it, right? We had certain alternative assets of like art and something and we killed that and so on. And I think it's very important and kind of a skill culturally for the company to be able to kill stuff. Because you will, everyone wants to make shit. Right? That's always a cool thing. Everyone loves to nerd out about product. And it's the easiest to make arguments of why you should build something. It's hard, or also therefore why you should keep something. It is hard for people to make arguments of why to kill something. And it's just like, this is how people are wired. And so killing is so much harder than building, but it might be as important. And so I think there's another massive aspect.
I love that. Any final thoughts or comments that you'd like to leave our audience with, as we look towards 2025?
I'm generally very excited about this year. Because of number one, public, what we've done and whatnot, and just where we are as a company. But also I think it's going to be an interesting year in the markets, that's for sure. Also, is what we're seeing with potential deregulation around crypto, or final regulation of crypto, potentially better said, coming up and so on. I think there's going to be a lot of things that are going to happen. And I think this year is going to be, quite exciting if you're in the markets and such. But other than that, I would say sign up for public. Get yourself an account. You won't be here. Have to sell in the end. Get yourself an account. Tell us what sucks. Well, we can make it better. But yeah.